Hi guys, and welcome back to another video on Educate FX. So today I'm going to be showing you how to utilize the risk to reward tool. It is pretty easy and straightforward. So it won't be a long video. Basically how to use the risk to reward is on TradingView, you just want to come over to the left hand side and click this little button, and then here you'll be found with long position or short position. Long is for buys, short is for sells. You just want to click it and then just place it here. So these lines indicate just a cycle market, bullish market that you want to try and buy in. Got a big push up to the upside here. So as you know, we never want to buy high. We want to buy at the lowest possible points before the next leg to the upside. So we've seen a nice pullback here. If we want to entry here, this risk to reward, the blue is our reward side, and the red is our risk. So from my strategy, I never risk more than 1% per trade. It's between 0.5 and 1% per trade I'll risk. Never above 1% because it never ends well. And then again, from my own trading strategy, I won't place any trades unless it's a minimum of 3 to 1 risk to reward. Meaning, if I've got a £100,000 account, I'm going to risk 1%, which is £1,000, to gain 3%, which is £3,000. Because if, say for instance, you've got a 1-to-1 risk to reward, basically means that you're risking the same amount of pips to gain the same amount of pips. You're risking £1,000 to gain £1,000, and to me that it doesn't work. Especially if you're in trading for a long term, it won't work and it's not sustainable. I do know people who do it, but that's with their own strategies, and with my own strategy it doesn't work. So as I say, minimum 1 to 3, but you really want to be going to them 1 to 5s, 1 to 6s, 1 to 10s, meaning you're risking 1% to gain 10% on your account. And another reason why it is vital to be doing this is, say for instance you've got a 1 to 6 trade here, and this is what you normally trade, a 1 to 6, 1 to 5. So you can lose, theoretically you can lose 5 trades in a row. So if you're losing 5 trades in a row and you're risking 1% per trade, and every one of them 5 trades hit your stop loss, that means you've just lost £5,000 because you're losing £1,000 per trade if you've got a £100,000 account. So you've just lost £5,000 out of 5 trades. However, with this strategy implemented into your trading plan, your next trade you take could potentially be 6% profit. So it only takes one trade to eliminate them other 5 trades that you've just had and took out the profit on. So 5 trades hit stop loss, 5,000 lost. However, on your 6th trade, you get a nice momentum to the upside, or if you're shorting to the downside, and you hit TP, which means you've just gained 6% on your account. So you've just made £6,000. So you've eliminated that £5,000 you've just lost, and then you've still left yourself with £1,000 profit. So you don't need to have a 70-80% win ratio, which is very, very hard to get. I don't know anyone personally who's got it above 70% win ratio. So my win ratio, say for instance, is only 40%, and it just goes to show you how important this risk to reward tool is. That you don't need to be winning 80% of your trades, because it's, as long as you've got a tight stop and your lot size, you're calculating your lot size and equivalent to your account, then you're gonna really feel the benefits of it a couple of weeks down the line once you start actually using the tool. I'll just try and show you how to how you can get the big risk to rewards, maybe say the 1 to 10s, the 1 to 15s. So let's just look at GA for a minute. So on GA, GBP odd, let's just say you got the overall market direction and it's going to, you potentially see it at 1.75. So now you've got your target, your long-term target in mind. So now you need to find the entry in the market to try and get the smallest stop loss with the biggest take profit. So how you can do this is you come down on the smaller time frame. So my entries are normally off the 15-minute, 5 and 3-minute time frames. So if we go down to the 5-minute time frame, right, so let's just get rid of this a sec. Oh no, let's move this out the way. So drop down to the 3-minute. Okay, so on the 3-minute time frame, you basically get an area of interest where you think price can come into and react from, which we are at the minute because we've just approached the 1.77 big psychological level for GA, and we've seen multiple rejections and blow-throughs in the past couple of weeks from it. So I know this is a highly big volume area where price could dip back down below from, or again it could explode, but we've seen bullish momentum here on the 3-minute. However, we've seen a big bearish candle on the 3-minute, a bearish engulfing, and it's just took out the 2 prior wicks. So now you could think, okay, momentum may be shifting to the downside now, especially with just coming up to the 1.77. Now you'd wait for a little pullback, and as you can see on the 3-minute time frame, we've tried to close above this level. We've spiked above, failing to close below it 1, 2, 3, 4, 5, 6 times. We've just had spikes going through it, however not closing below it. So you can see pressure is building, which could be time for the entry. So you'd get an entry in here, and then you'd put your stops. You could potentially put your stops above 1.77, which is 12 pips. But if you really want them good risk to rewards, try and eliminate that to maybe 7 pips, 6 pips, just above the stops, and just monitor it closely. So now you've got a 6 or 7 pip stop loss. However, your target is 100 pips. Your target's 100 pips and you've got a 7 or 8 pip stop loss because you refine your tools and you're going down on the smaller time frames. So you got a lovely trade here, 13.3, so 1 to 13 trade. So realistically, you're risking 1%, which is £1,000, to gain 13%, which is £13,000. So this is the route you want to be taking. You may seem that your stop losses hit a lot more frequent. Like I'm saying, you might get 6 or 7 losses in a row, but that doesn't say on your 8th trade, if you've got a 1 to 13, you're gaining 13% on your next trade, eliminating them 5 or 6 losses and still ending the week in £6,000 or £7,000 profit. These little things just give you that little edge psychologically, and especially in the markets themselves on the charts. They just give the trader the edge, and all traders should be looking for the edge. Just trying to how they can make the trading better for themselves and keep on expanding their trading and learning. But definitely a tool that should be utilized and should be used by everyone in my group by now. And if you're not using this tool after this video, if you're still not understanding, give me a message, no problem at all. Reach out to me, we can have a good chat, jump on a Zoom call and we can try and get your head around this risk to reward. But it is kind of basics of Forex. You should really know this, but I've just been trying to tell you just how to get them bigger rewards. Remember, so the takeaways: don't be using anything less than a 1 to 3. To get the bigger risk to rewards in the markets, you need to be scoping down on the smaller time frames, 5 minutes, 3-minute time frames to get them entries in. And over a long term, you will see your account growing quite rapidly. And once it does, it gives you a psychological boost as well. So definitely utilize the risk to reward. Again, any questions, give me a message. But I hope you guys have had an excellent week, and I hope you carry on your successful week going into Friday and have a wonderful weekend as well.